Welcome to our first Perth Property update for 2013. I'm Jarrad Mahon. We're set already to have a very different 2013 in our Perth property market than the kind of market we had in 2012. We're now in what we call a seller's market. And don't be put off by the term seller's market. I'm not coming from a space of spruiking, but it simply means that demand in the market is exceeding our supply, and that's putting upward pressure on prices. And I'll run through what I'm actually seeing in the market and the stats to back that up that we're getting from REWA. Going into Christmas, we were at 10,000 properties for sale in December. And the number of properties coming on obviously tapered off as we went to Christmas, and we tended to take a really good break. Everyone was on holidays, very little coming on the market till mid to end of January. Demand kept building over that time. People that have been delaying purchase options started to get their plans clear for 2013, and buyers were increasing with very little new options available for them. So what that meant as the new properties have come on the market for sale at the end of Jan, early Feb, we've been getting an increasing number of genuine buyers waiting for them. Buyers are starting to miss out, they're starting to get desperate, they start to get clear on what they're after, what they want, and when that property comes up, they're acting even more decisively. So what we're seeing on the internet traffic side is the number of views for the average property go from what we were getting last year at 500 to 800 views to now getting 2,000, I had 3,000 views on a property in a single week the other day. Now that's a lot of numbers, and that's translating through to serious numbers at home opens. My norm for a good week last year, towards the end of last year, was 8 to 12 through. We're now getting 15 to 18 groups through the average home open, and I had my record number of attendees on the weekend at 37. That's a lot of work, a lot of people to meet as they come in, and it becomes very difficult to get a feeling of feedback from people because there's so little time to speak to them as they come. But all of that competition is leading to multiple offers from genuine buyers, and we're achieving over asking price on the majority of properties that I'm listing at the moment. Keeping in mind this increasing level of demand has seen properties for sale taper off even more, and we're now, from our numbers of 10,000 on the market in December, we're now down to 9,059 as of today. So we've had a further tightening of the market since then, and at the same time last year, to give you an idea how that compares, we had 14,188 compared to 9,000 now. That's what a different market we're in now, and things have certainly swung around drastically. This has seen, for me, my average selling days decrease from 21 days at the end of last year to 8 days on the market. So everything I'm selling generally at first home open, some I'm selling after 3 or 4 days, but I'm trying to gather that demand during the week and then focus it to that one time on the weekend to get the best price for my owners. This extra money that my owners are getting in the 400 to 600,000 price point is starting to already flow up to the higher prices as people are upgrading, are starting to already flow up to the 700 to 900 price point. And some of my owners over the last month that are going through that upgrade are finding the same, that multiple offers are on properties up in that price point, and they're achieving well over what the sales data would suggest that they're worth. So we're definitely seeing it ripple up now. At the end of last year, it was starting to flow through, but now it's definitely putting pressure on that upper segment of the market too. Demand's also starting to pick up in our outer suburbs, and we're getting turnover, but we haven't got the upward pressure on price in those far outer suburbs. We're also getting more turnover in our retirement destinations of Rockingham and Mandurah. We've got quite a lot of owners selling in Perth, putting money in the pocketing the difference in price between their $400,000 to $500,000 house here moving down there, picking up something 300 to 400, and having a bit of extra money for their retirement. So properties are turning over down there, but it's nowhere near the demand that we're getting in Perth. It's not just homeowners out there. Investors are being lured back by the increasing rental returns and the prospect of growth. Many are, saying to me, Jarrad, it's already moving, everything's going so fast. If only we could go back to last year and the last few years and have bought some more key properties. But, there's always an opportunity in every market, and we've just got to look through to those. If you are looking to make a purchase, get in touch and we can work out the right strategy and right plan for you this year. Off the plan sales that I'm starting to do more of, they're flying out the door in the 2 to 5 kilometre radius of Perth. That's the hot zone at the moment. Anything that has the 2x2s I'm seeing as being most popular. 1x1s also popular. What's really striking a chord with the apartment sales is the smaller complexes of 8 to 10, but they're in a lifestyle location, so they've got access to cafe, strip, transport, amenities. They're really, flying out like hotcakes. We're selling projects out in 2 to 3 weeks, whereas normally they'd have a 3 to 4 month marketing period. And we're also seeing house and land packages in the outer estates getting soaked up very quickly. They're also popular with the first home buyers that just want new, they want modern, and they're preferring that option to an established 3x1 that's more dated, and so they're preferring to go a little bit further out and get that modern, new feel. They can also go through and design it to being user friendly for them. The rental market, on the rental side, it's just remaining steady at 3,000 properties on the rental market with a median rent of $450 per week. So that's just continuing to tick over, and there's certainly a reason for tenants to want to get out of the rental side. The other states across Australia are doing things a lot tougher. It seems like every other week there's a natural disaster. Their economies are not as backed by the resource sector as we are in Perth. And the expectation among economists is still that we'll get some lowering of interest rates over the next 6 months. So even if we see one lowering over the next 6 months, that's going to keep pressure on on our market here in Perth. There's going to be a bit of a balancing act, and we are certainly leading the way in Australia with our recovery. So things are only going to continue to tighten as far as I can see, giving tenants with that lowering interest rate a greater reason to escape renting, and investors still being lured back because of the increasing returns, lower cost of interest, rentals holding strong, and increasing returns for them. So that's my Perth property update for February. Sorry it took me a month to get this out to you. I have had an extremely busy month, my biggest month of selling homes ever in my career, so things are very hot at the moment, and I'm always available to help you get the best price for your place or make your next purchase in a very smart way. So get in touch, and thanks for listening.